which is from CESC Limited. CESC is India's first fully integrated power utility company. The company has redefined itself and is in the midst of executing initial 3 gigawatts of renewable capacity in India. Now for the presentation, I would like to invite on the dais, firstly, Mr. Rajarshi Banerjee, ED and CFO, CESC Limited. Along with him, Mr. Vineet Sikka, Managing Director, Distribution Business, Mr. Brajesh Singh, Managing Director, Generation Business, CESC Limited, and Mr. Sandeep Kashyap, CEO, Renewables, CESC Limited. We have all our presenters right on stage. I would now like to give it over to Mr. Rajarshi Banerjee.
Very good morning to all of you once again, and welcome to the specific presentation on CESC, part of the RP Sanjeev Goenka Group Investors Day today. We'll cover in 3 parts roughly. One is about the group, which all of you are quite well aware about, and Chairman and Vice Chairman has covered the things. Second part, we'll very briefly touch upon on the Indian power scenario kind of a thing, and then come to CESC mainly on the growth prospects. So I think we have got 50 minutes now. So we'll try to cover it in half an hour, 15-20 minutes, we'll keep it for Q&A. So now 11:10, we'll try to be complete by 11:35, 11:40, 11:45 maximum. Okay, fine, thanks. So, CESC is the first utility in the country which the electricity came, etc., after a few years of London, which all of us know. And over last 125 years or so, there have been growth in different areas, both in generation and distribution. And roughly, with an overall kind of thing, apart from Calcutta and Noida, where we have got the licenses on distribution, generation capacities have grown very significantly in last couple of years, which mostly have been in the area of thermal. And of course, now onwards, we will be going significantly, going and growing in the green space. This is the overall Indian power sector scenario, and I would just point out that where CESC features and where are the growth prospects coming from there. The demand growth has been very phenomenal in last couple of years in the entire Indian power scenario, and where CESC area, especially in Calcutta, which has always been, as Chairman has been talking, 1.5% kind of a growth, we are now seeing a 7-8% kind of a growth. The other licensee area, which has been the first private license we got after independence, is in the Greater Noida. There the growth has been consistently at double digit. Double digit means 16-20% kind of a growth. And along with the energy demand, the peak demand has also been growing, and in both these places, we have been able to manage that growth very significantly and without any interruptions, etc. Especially in Calcutta area, which earlier was quite infamous for power cuts, etc. So it has been a very, very different kind of experience in present scenario. And supply, quality of supply and efficiencies, we are at the peak, which we'll cover in details. Now the thing is that with this kind of growth, in consumption as well as peak demand, so there is a very significant headroom for Indian power scenario to grow, and both on thermal and green energy side or renewable energy side, we are riding on that kind of a growth prospect. Coming to a very specific thing on the thermal side, since as of now, as we speak now, mostly our generations are in thermal space. The coal issues, which has been very significantly improving also scenario, that also helps us in managing this kind of efficiency, both in generation as well as in the commercial on the cost side. This is demand growth, which we have been talking about. and the gap that is there, and this is something which we are trying to get the maximum benefit out of this kind of opportunities, those which are coming. The other part, which again we can cover it in the Q&A section, we are also not only satisfied with the existing areas of licenses and also the areas where we operate the distribution franchisee areas. We are also going forward for the newer areas of license which are getting privatized. And in last couple of years, wherever the privatizations have happened, we have been in most of those places, in the majority of those places. And we are also becoming ready for the next, taking the next level of challenge as far as the competition coming in and the new Electricity Act coming in. Green energy transitions, which we'll cover later on, and Mr. Sandeep Kashyap is there, he will talk about it in details as and when it comes in. But definitely this has been the change, and we are completely geared up, as there has been very detailed discussion in the earlier session, to take these challenges on. Our green initiatives, specific green initiatives, I would request Mr. Sandeep Kashyap to talk briefly on this.
Hello. So in the previous session, we spoke about green initiatives, our plan to develop 3.2 gigawatt portfolio, which is going to be a mix of solar and wind, because majority of the new requirements are going to be driven by hybrid projects going forward. Therefore, the connectivity and land for the purpose of projects are designed and taken in such a way that we will be able to provide such hybrid power to our prospective customers. In that, if you see on the connectivity side, we have on the solar front, we have got 900 megawatt of connectivity in place with one acquisition of Badla SKP, which is there, and another 300 megawatt, which is under the final stages of acquisitions, totaling to 1200 megawatt. On the wind side, we have signed term sheets with Inox for 1.5 gigawatt, under which they will provide us complete EPC services and they will provide us the complete site. At the same time, we have also signed up framework agreement with Suzlon, covering almost 1,000 megawatt of wind sites, totaling to 2.5. And this pipeline is actually growing as we speak, because new sites are coming in for validation, and we are evaluating those from the connectivity perspective. We have applied for almost 2675 megawatt of connectivity at the CTU, which partially has been granted, and balance is recommended to be granted. So we can say that we have secured 100% connectivity at the CTU, wherever we have applied for. It's a combination of solar and wind sites. And wind sites, we have 4 states: Andhra Pradesh, Karnataka, MP, and Gujarat, where we have these sites. And lastly, on the green hydrogen side, we have secured one project in CESC site bid, which is 10,500 metric ton per day. And currently we have shortlisted a land near Gopalpur port, and we have registered the project for the incentive schemes in Odisha. Parallelly, we are also looking at all the new tenders which are coming up in the refineries for similar capacities. So our eyes are open both for exports as well as for Indian market. The market demand has started to go up, and we are quite bullish about it that we'll be able to set up this project in the defined timelines.
Fine, thank you, Sandeep. This is basically our generation assets, and I would request Mr. Brajesh Singh to cover.
Good morning to all. We are having the 5 power stations. One is Bajbaj, that is 3 into 250 megawatt. Haldia is 2 into 300 megawatt. And Chandrapuri is 2 into 300 megawatt. Southern is 2 into 67.5 megawatt. And Crescent is 40 megawatt. We are having the PPA, fuel tie-up. There's a lot of power demand as per the forecast in the next 2-3 years going to be continue. Though renewable there is a growth, but still thermal is going to meet the current requirement. Maybe the operational regime of the thermal is going to be changed to the earlier. From the history we have seen the thermal power sectors, a lot of changes happens. In the 90s to 2000 there was a PLF mode operation. Everyone was trying to run the station at highest PLF mode. After that there was a great shift on efficiency mode. Run the units most efficiently. And recently 2018 onwards is the most economic and commercially correct operation, because this thermal power plant is going to be flexibilized based on the requirement. Since the RE is based on the sun intensity in the daytime, till now the battery is going to be viable and cheap, affordable. Thermal is going to meet the requirement as per the grid requirement. So there is also the huge production in the Coal India. The Coal India already the restriction was there above 100%, up to 120% is the maximum allowed with the FSA. We can lift the coal. Now they have lifted this limit. We can get the coal as per our requirement. Our units are running last 3-4 years continuous, more than 90%, 87% PLF. So I am sure with this lift of this Coal India limit of the coal, it's going to help us. As I was telling, since this thermal power plants is going to operate in flexibilization mode, so there are a lot of initiatives need to be done in operation and maintenance side, because the operation and maintenance which are typically described for the thermal power plant by the OEM is the fixed running hours, then it's going to preventive maintenance, and now it's more in prognostic and the prescriptive type operations. Prescriptive and prognostic means based on the requirement, the units need to ramp up and ramp down, and your efficiency performance is near to designs. How to meet that? There are a number of models we have implemented. These are the models which are presently used so that the parameters should not deteriorate, and efficiency and the heat rate and the KPI of the thermal power plants, which is normally defined as the heat rate and APC, that should maintain near about the operating values.
And the interesting slide. I think it's a bit different from generation, commercial together. Please, sir.
Yeah, correct. So this is now the recent requirement of the operations mechanism. It should be economic and commercially correct operation. That means whenever we are operating, that should be based on the price and the cost on which we are operating and which power is available in the market. If the power is available in the market due to the low cost RE, that should be imported and our generation should be reduced. So we have developed a number of models on this. That is the annual power mix optimization tool that is deciding based on the market value what should be the operational regime, economic dispatch of our stations. The daily power mix optimization tool is the day-wise peak hours, off-peak hour, lean hours, how we are going to operate accordingly. Our coal requirement, feeding in the bunkers of the coal quality, low-grade coal, high-grade coal, medium-grade coal, so that my cost should be controlled based on the requirement of the hours, peak hours and off-peak hours. Then the exchange rate forecasting. Based on the exchange rate forecasting, we need to schedule our system operation. What should be our generation plan? Accordingly, coal feeding will be controlled. The sent out cost will be controlled. Then the demand forecasting. And the power procurement playbook is the power procurement playbook is the whole year planning based on the requirement and prediction. The short term or medium term, we should have the plan so that my inventory should not increase in the coal. That inventory should be maintained at the optimum level and meet the requirements. So that is going to play a lot of improvement in our revenues.
Fine, thank you.
And this slide is the overall performance of the last 4-5 years. You can see the performance of our stations. So PLF is 91%, now it's 24 is 87%. Little bit variation is more or less in the same range. Same southern is which are the 67.5 megawatt. This is our standby units, we can say. Whenever the requirement is there, we are starting up to meet the big demand, and whenever the economic dispatch is not good, we are taking the shutdown. Haldia is continuous performing very well. Dhariwal is also performing very well. As the Dhariwal, March 25, the PPA with the railway is going to be completed. Railway is still interested. There is a lot of also mid-term and the long-term bids are in the market. Like Haryana government, the 6-year bid is floated. Assam is coming with the 25 years. CESC also 200 megawatt power requirement for next 3 years. Noida Power is also requirement of 100 megawatt. So we are working on it, and definitely we are going to tie up. Then Crescent Power is continuous, giving the 94%, 95% PLF. Solar PLF normally 20 to 21%. We are operating in the range of same at the best power stations.
One interesting thing I would just bring your to notice that managing these PLFs enables us really to get the highest quantum of coal from CIL and CIL subsidiaries, and for which we didn't have to resort to the imported coal, which would have been much more expensive and things like that. And that's how with the flexibility which in the earlier, prior to the earlier slide, Mr. Singh has spoken, so that's the dynamic thing which we have brought in, and that we are improving very significantly, which brings in a different kind of commercial focus in the overall organizational interest. This is distribution.
Yeah, so in distribution, as all of you would be knowing, we have our major, the setup, oldest setup in Calcutta, wherein we cater to a large area of 567 square kilometers, largest customer base of around 36 lakhs plus. And the losses, let me share with you, in Calcutta have drastically reduced from around 9% plus in 2018, and last year we closed at 6.89. And of course this year also we are targeting very aggressive numbers for loss reduction. In terms of revenues also, the revenues have grown with respect to last year, and Q1 also our revenues have grown with respect to same quarter last year. So Noida already, I think, covered that the growth has been quite good. Rajasthan also has been profitable now, and except for Kota, wherein, of course, some little bit of tweaking is required in terms of efforts on loss reduction and all. And Malegaon was the last acquired business, wherein also, though losses looks as of now 39, but efforts are on to contain it and bring it down. Of course, there are some challenges with respect to local, industries and administrative support and all, so, but we'll overcome that as well. So overall, in the distribution sector, things are in place, and like I mentioned earlier, we are looking forward to become future-ready, profitable, with a profitable growth, to reduce our, fresh RA creations, reduce our cost, collect as much as you can on the cash side, don't create much of RAs. Yeah.
Next few slides, we will continue on the technology support part of the
program. So CESC has been, I think, a lot of technology initiatives have been taken, digitization initiatives in the past. And we are proud to say that I think we lead in amongst 70 distribution companies. We are the #1 as far as the technology adoption, technology infusion is concerned. So first of all, see, we have captured here some blocks, which first one shows the IoT sensors for real-time monitoring of grid. So we have a large set of power transformers, large set of distribution transformers where IoT devices are there. And that helps us in predictive maintenance, reduce the, lowers the, downtime and all. We have used augmented reality, virtual reality, mixed reality for faster response times. Sitting in the office, you can control, you can troubleshoot the devices kilometers away. We have used the generative AI-based social media. This was a very recent launch, wherein the various social media inputs coming are segregated with respect to the sentiments, with respect to the complaints, whether it is a no supply complaint or a billing complaint, and then automated responses, given as if a human being is, responding. It's quite effective, and with this, our traffic, which we are able to control in the fastest possible way, is also improved. I think go back. That slide was,
Before what?
Before this. It's not moving. Then cloud adoption to accelerate IT modernization. So we are the first company, I think, in the country to adopt cloud in the distribution sector. The cloud basically presently we are using is for the call center operations. See, presently let us say 800 calls used to come and we used to handle at any moment of time. Now we can handle through cloud bots 2,000 calls at a time. So in a day, in peak summer, we can handle around 3 lakh plus calls. And with this, our abundant calls has reduced drastically from around 17-18% to now around 4%. So we'll be further implementing this for many other customer-based services. Idea is to engage with the customer. Once competition comes in, you have an engaged customer, he'll not go anywhere. A lot of value-added services also we're creating, giving to customers. We are going to launch a couple of programs in a few weeks, wherein a lot of value add will come to the customers, and you will see also. Then big data analytics using AI ML. Because in the distribution sector, you collect a lot of data, meter data, you have so many things. But this data is of no use until unless you utilize it for actionables, which can lead to improved customer service, reduction in cost, improved revenues. So we are using the data collected quite effectively using AI ML. We have latest state-of-the-art IT infrastructure. Very recently, we have commissioned successfully the SCADA, upgraded SCADA, and this SCADA can monitor up to distribution transformer level. Generally, in utilities, this can monitor only up to 11 kV feeder levels. On the outage management side, we have leveraged the technology to the hilt. We have done RMU and pillar box automation. Self-healing network is there. The network is in the ring. Supply goes at one point, it is fed automatically through other point. We have an extensive optical fiber network, which is 1,500 kilometers running across the city. We are not dependent on the local network operators for transmission of our data. SCADA implementation I have already covered. So outages have reduced drastically, and the restoration time also has improved dramatically. On the customer engagement side, we are very proud to say that our 80% plus customers are now paying online, digitally. And if you see value-wise, I'm talking in terms of number of transactions, but if you see value-wise, it is 85% plus. And we are using various methods, like WhatsApp business is used as a virtual service center to fetch the bills, to pay the bills, to get multiple services. So it's a virtual service center in your hands, like the B2C I talked in the beginning. We have the metaverse, the first utility to have a metaverse harnessing the various customer services. We have e-voice, a feedback system. Go green. So as was explained in the last session, we are tying up a lot of green power. And as per regulation, the regulator allows us, the customers to go for green tariff and with an additional 50 paisa per unit. So customers are opting for green tariff, we are supporting them. DSM measures, like I talked of capex efficiency. Capex efficiency means we should get maximum MVAs through my installed transformers or feeders or other equipment. And how it is possible? Generally in a distribution sector, you would see in large cities, the peak comes during 3 p.m. in the afternoon and 12 o'clock in the night. Because reason is 3 p.m. schools close, kids rush home, the microwaves are on, the ACs are on, in summer I'm talking, in the night, 12 o'clock in the night because all ACs are on. So major load is AC load in the country. A lot of ACs are sold, millions of ACs are sold, in Calcutta also. And I'm very proud to say that this year, in April, we touched the peak of 2728 megawatt, the highest ever. But only thing is this peak lasts for a few minutes. And you have to design your network for those many minutes only. Other time it remain empty. So we are using the DSM, the demand side management techniques, wherein we are using the behavioral energy efficiency programs. That means we are going to the customers telling them don't switch on 5 ACs at a time, switch on only 2, so that the peak demand reduces. And we are able to optimize our power purchase also, expensive power purchase also, and also we are able to use our network in a proper way without overloading. So DSM is going to be the future and we'll be working more on this. So I think no other company in the country has patents. And we have a large team who does a lot of research development into various facets of the distribution sector. So very proud to say that we have 8 patents received so far. and these are the certificates and these are the details of these patents. So, and further many more are likely to, come in. Yeah. Next.
So before we move on to Noida, on the technology side, especially in the distribution, which we are riding on the three things. One is that extensive technology intervention for being very judicious on the capex spending. We measure the detailed kind of requirements area-wise, and then we put the investments. Second most important thing is about the loss control part of the thing, because the distribution losses, the 6.89, which the current year, as Mr. Sikka has just now pointed out, we have a further more stringent targets, and this has got something on the transmission side. So 1.3 to 1.5%, if we take it out, then we are at something in around 5.5 kind of a number, even less than that. I recall, I think 7-8 years back, we participated a program with State Grid Corporation of China, who controls almost 80% of the China's distribution, and there the commercial losses have been in and around 6%. So in spite of different kind of localized problems and all those things, the loss kind of a thing where we have been able to bring it. So apart from the regular activities on the ground, there is a very significant inputs from the technology side as well. Third one is about the customer engagement, this 85% kind of a value that collections, and also many of the customers, most of the other customer activities have been made on the digital platform. That is something very, very different and probably unique in the entire country. And of course, last but not the least, all these things enable us to save very significantly on the employee side kind of a thing. And last 4 years, there has been a very significant reduction in the overall, so 30 to 35% kind of a reduction has happened. We are working for more on the productivity side, etc., and whereby we expect to have a very, very significant kind of cost savings, which Chairman has also pointed out. Coming to Noida, which we have already spoken about, double-digit growth. Double-digit means 16 to 20% kind of a growth that is there. The efficiency parameters are very significant. The agricultural lands have all been permitted to be converted to either domestic or industrial or commercial and industrial kind of places. Tariffs have been set at a very good level. And also the distribution losses, collection efficiencies, all these parameters by which generally a distribution utility is assessed, that is there. And the regulatory kind of things, the relationship, as well as the things which have also been at a very, very good place that way. And that is the reason where we do not have much of long-term tie-up of the power, excepting that from the Chandrapur project. So this becomes a very perfect fitting when the own generation from the greener side would come, so which will make it green. On one side it is investment, and on the other side it is a much cheaper power, which would enable us to ride on the growth in a very, very cost efficient manner. These are the certain highlights of these things which we all talked about, the losses of operational side and all those kind of things. Malegaon, definitely I will take the odd man out, the outlier. Of course, which we have been trying, it has come down, but again, we need to see how we take it in future. Rest of the things are very clear from where to where it has come down and what are the overall kind of prospects that is there. Generation and plant load factor we have talked about in detail, so I am just moving ahead. This is the overall financial parameters. Let us spend some time on this. Revenue, these are all consolidated numbers. You can see that revenue has significantly grown by almost 25%, and profits have also more or less moved on that side. Now here I would like to point out one particular thing, this 1450 of this profit which is there on the consolidation side. This is after 100 crores of loss in Malegaon, which is something in a very outlier kind of a situation. So if we leave that out, so actually it is 1550 Plus, there is some one-time provision which you are aware we have dealt with in CESC accounts of cleansing of these things, which again has been in the region of 100 crores kind of a number. So these are the things and these are the potentials. So growth from 1300 on a like-to-like basis, it is almost 1650 kind of a thing. So 30 to 40% kind of a growth has already happened, and we have got different plans to move it very significantly in multiple times over next 3 to 4 years of time frame. EPS we are showing, and the price earning you can well calculate. Significant thing on the dividend, because couple of years back there has been very significant thing used to come from the investors in different forums. One is about that CESC has been a place where all kinds of companies were there, be it retail, be it fast source, that is IT, and different kind of things were there. So to make it absolutely a power vertical within the group, 3-4 years back, we took that thing and through a complete transparent process of demerger, mirror imaging kind of thing, we make the companies aligned to the sectors to which it belongs. After that also, given again the investors thing about the payouts and all those kind of things, you can see the payout has moved almost to 40% kind of a thing. In terms of, because this 4.5 translates to roughly around rupees 600 crores kind of a number, so which is basically 40% kind of a payout, and which more or less in that region has been followed not only for CESC, in most of the group companies like that. So these have been the movement, and last but not the least, which in the earlier session there has been some issues on the debt and leveraging, and group and chairman significant reservation about growth, debt and all those things are very well known, and this kind of a thing. And so with all the kind of things, this kind of investments, the debt equity in power, it remains at 1.2 kind of a number on a consolidated basis. And there has not been any growth actually in the debt over last 3 to 4 years kind of a time frame. These are the overall summary, and which I was talking about, this 1450. If you take out Malegaon, then it is 1550, and there have been some specific provisions. So that's which I was talking about. And you see the significant part I would like to focus in Dhariwal, that Chandrapur project. At one point in time, it was in a very significant losses. In last 3 years also, you see from 130 or 150 to 300, it has almost already doubled, and it has again a significant potential in immediately after this financial year is over, when the railway contract is over, and we are examining different means, exploring different means how best we can make that power, 50% of that power available to have these ride on the profitability part of it. Definitely it would contribute very, very significantly. And of course, there would be investments, apart from the green part of the thing, usual in the distribution side as well as on the transmission side, to bring in more power in the city and all those kind of things, so that ultimately these will be all capex based. And of course, we will be having and earning the return on the equity within the as per the regulatory means and provisions. This is again ESG commitment, says Sandeep, if you could just highlight little bit, touch base, and then we can finish this session, and then we can go for the just 2 minutes on this.
While we go on for the greenfield projects, ESG is one major area of focus for us, and on all the fronts, while we are taking various steps, starting from the land acquisition and then going for the project execution, and then we're taking all the steps to cover all the facets of ESG and compliances. There is a very strong team which is in place at the corporate, who are monitoring the whole process, as well as at each plant location we have resources dedicated to see the complete compliance on the ESG. This is also taken as a commitment from the group that we will comply with the best of the standards in terms of ESG. going forward in all our projects, which has been the case earlier also. So it is always a high priority from a company perspective.
And last point, especially on the especially on the HR side, again, Chairman has spoken. So while we continue to get the awards as a great place to work and all those kind of things, but at the same time, accountability, etc., has been reinforced and in a very, very different way. And last but not the least, about the sustainability other models, that those are also we are following. So with this, we conclude the presentation part of it, and then, of course, we'd be happy to answer the questions. Please, sir.
Hi, I'm Sumit Kishore from Axis Capital. My first question is in relation to your distribution business. Could you outline what is the total position on regulatory assets presently? And after the implementation of that FPPAC, what is the likely increase in regulatory assets you're likely to have in the current financial year? And if at all, what is the strategy now that tariff hikes in Calcutta have not happened for a long, long time? If at all, what is the outlook there and a potential unlocking of value trapped in regulatory assets over the next few years? That's my first question.
Perfect. Let me answer it in my own way. Then, of course, if there is any more question, I will answer. First of all, the regulatory asset in March 24, it remained around 2,500 crores, because normally there is a confusion with the actual number that gets published, but that has a part of the deferred tax, because I'm sure that deferred tax accounting on one side, as per the accounting literature, we have to provide for deferred tax given our higher depreciation claims, etc. But deferred tax being a fictional one, and income tax is a reimbursable expenses as per the regulatory provision. So there is a contra item. So on one side there is a liability, on the other side there is an asset, which comes under the regulatory asset. So if we knock it off, then the amount comes at around 2,500 crore as on March 24. Now, after that, that means 24, 25 onwards, and especially last 2-3 years, there has been very significant rise, both in the price of the coal procurement as well as in the power purchase that we need to top it up beyond our own generation. So that has given rise to part of that kind of a thing. Now, the way we have started, and if you recall, since it was not happening, the nod was not coming, I'll be very candid on this, the nod was not coming. So we relied on the central government rules, which allows us to recover this thing as an FPPS, because otherwise, as per the state regulations also, these variable costs can be recovered. So last 1 year, the moment the rules came in, last 1 year we followed a strategy of putting it into the bill and let the consumers know that this is something which they ought to pay. We have not included in their payable amount. So now recently, which we have started after following this rigor for more than a year, we have started it. And right now, with the pace which we have started, and of course we had to be a bit judicious on the quantum which we initially start off. So with that kind of a thing, 500 to 600 crores at the current run rate, we are supposed to recover. We would be recovering. 2 months of billing has already happened. And hopefully, given our requirements, it will go up. Second, it is expected to go up, let me put it this way. Second most important thing is that now we have been very significantly inwardly, we have become inwardly focused on managing the cost, both on fixed side as well as on the variable cost side. Now on the variable cost side, apart from our own initiatives of this green power development, we have already signed the agreements with CESC and AMS, which would be around 250 megawatt, which in million unit terms, energy unit terms, it gives us around 750 million units. Roughly 2,000 million units we need to bring power from outside over and above our own generation. And on these 750 million units, the way the cost structure is there, which should happen from next year itself, which was supposed to start from this financial year. For some reason, it got little bit delayed. So next year onwards, it will happen. And on that 750 million units, roughly the savings potential is almost 300 crores. Because the power that we buy, it's average of 750 kind of a number, and that should be not more than 350 kind of a thing, including transmission and everything. So that is straight away a box of 300 crore savings, plus there are other means of savings. And with the latest coal policy that again got talked about in the earlier session, we also expect that further savings potential should come. So with overall this kind of thing, before our own generation from the green power comes, the regulatory assets, maybe in 25 there will be some additions. Going forward, it is expected that at least it get plateaued and all those kind of things. And once the complete thing of this, out of this 3.2, whatever comes to Calcutta, once the entire thing is over in next 3 years kind of a time frame, so we should be having, even with the existing tariff and whatever it goes up, and of course, it is already 7 years plus of the same tariff, so obviously we can expect something more. And I would also tell you, I can also tell you, little bit digressing, that for last 7 years, we have been at the bottom, and our tagline has been proud to be at the bottom. And now we continue to be at the bottom even with this increase, and the gradient of the other utilities price have become steeper and steeper. So ultimately, there has to be something, very specific things has to happen on the tariff. But nevertheless, with all these kind of developments, and which earlier also I tried to cover, that's something very unique growth pattern as well as managing cost and tariff things we have embraced this time, so that we do not foresee much of an issue in next 1 or 2 years kind of a time frame, and riding on the overall profitability growth and all those things from a consolidated entity purpose.
My second question is on the renewables business and also attached with distribution. So where are we in the tendering process in Calcutta and Noida, in terms of procuring that green power to supply in your own distribution circle? By when is that process likely to be complete, and for what capacity, separately for Calcutta and Noida? And Sandeep sir, if you had to put a number in terms of FY27 end, FY28 end, FY29 end, where would the installed renewable capacity of CESC be? I mean, what would those numbers be? I understand, there are a lot of moving parts, but based on your aspiration right now, where would you put those numbers?
So coming to your first question, in terms of the tendering part, CESC has come out with a tender for 300 megawatt solar, which is 150 megawatt and 150 megawatt of green shoe, which is currently open in terms of the bidding. Participation has happened, and I think on the coming Tuesday, we will have the reverse auction.
If I may just put it in these two parts. One, first of all, the regulatory piece, that we will deal with it as per the let down processes and all those things. That is in WIP. And coming to the additional thing, part of the thing, it would be roughly, as Chairman had also spoken in the internal targets, roughly 1 gigawatt for CESC immediately out of these 3.2. Another one should be for Noida, and another one would be there for the distribution areas, depending on the gaps that is there. Yeah. So that's 1 gigawatt and 1 gigawatt, 1 gigawatt, 1 gigawatt. That's the 3-year kind of a phasing. And processes definitely would be followed or planned to be followed, which should sail through in the regulatory processes.
So 1.2 gigawatt for other distribution circles means your franchisee also?
Franchisee, you see, franchisee is a very interesting question. We have to see, because apparently in the franchisee agreements it is there that the state discoms have the right to sell and right to push the power. We need to see, once we meet our licensee area where we are absolutely free to do it, once that is done, and of course if the facilities are there and if the power is there, then we need to take it up. And of course, if it is a significant matter of cost, we think that we should get some dispensation within the or under the DFs, because there is a provision that if there is an issue, then of course power can be procured from other sources. But generally it is from the DISCOM itself, because we are the franchisees under the DISCOM. So DISCOM has the first right to supply. We need to see once we have the facilities and we have the surplus powers. I think, Sandeep, that covers it. Please.
Thank you.
Please, sir.
Hello. Hi, sir. Good morning. This is Harsh here from Rira Holdings.
Oh.
Yeah. Sir, can you quantify the amount of recoveries that you're expecting in Kolkata for which you have applied, and what kind of tariff hike are we expecting that if it goes through?
You see, as I've said just now, that the way we have started, it is a 500 to 600 crore per annum kind of a thing with which we have started. Definitely the headroom is for a larger sum, and that is only in account of variable cost, because FPPS allows us to get under the variable cost side. Fixed cost side, if you have seen our tariff awards and orders, etc., it is like that since they are on a goal-seeking kind of a thing of our current average tariff of 731. So many of the things, in many regulators, what they do, they just cut the costs. Fortunately for our case, there has not been any disallowances of the cost, there have been deferrals of the cost. For example, the depreciation, the regulator themselves have increased the rate without putting that into the tariff or ARR, what it is technically called. So obviously, and that's a single item of 200 crores. The regulator themselves have prescribed to depreciate the plants on a faster way. So that itself is 200 crores. For example, tax, income tax, which is a pass-through, part they give and part they say that, okay, once you pay, then we will come and we will deal with it in the truing up petitions. Some of the finance costs, they say like that. So it is significantly, the things are, without getting into the disallowance mode, it is on a deferral mode to match that number. So now it is already 7.5 years, not even 7 years, 7.5 years to be precise. And as I've said that we continue to be at the bottom, and the other gradients have been very steep. So if you see that even with this increase, we are still below, south of 8. Any place you talk about, I'm not comparing the Bombay or South Bombay or some part of Delhi, which have been 9 rupee, 10 rupee kind of a thing before the subsidies. That is also, it is also south of 8, but any place, we are there in Rajasthan, we are there in other places of Maharashtra, we are there in UP. Everywhere it is 850 kind of a thing, which is generally the lower part of the thing. So clearly with this, there is a 70 paisa to 1 rupee kind of delta that is there. So now, and that is fully backed up by the reasons and all those things. Now we need to see how fast we can get into this thing. Important part, again I am underscoring, is that in spite of that being there, and since there is an accumulation of the assets, regulatory assets, so what we are trying to do, reduce the expectation on that and keep that headroom available for taking care of the past accumulations.
And sir, two more questions. You, a few minutes back, you mentioned that there is possibility of saving 300 crore on the power procurement cost, power units that you are purchasing from outside. So if you can elaborate on what, I mean, the elements where you can save the cost, that's number one. And number two, while Noida, you have mentioned that you can continue to grow at double-digit growth for a few years. On a blended basis, what kind of volume growth are we expecting on the DISCOM business? Just these two questions.
First question I could hear that how this 300 crore only this thing. Say this 250 megawatt of power that we have tied up with a CESC contract as well as a contract with another developer AMS, that underlying energy is 750 billion units once it fully starts coming in. This is not our own, this 3 gigawatt or 3.2 gigawatt program. So on that 750 million units, right now we procure 2000 million units, which average cost is around 7 rupee to 7 rupee 50 paisa from outside. And that would be say 3.50. So 4 rupees savings roughly on that account itself, it brings a savings potential of 300 crores. And of course, there are host of other cost savings initiatives which are there, and that's why we expect to land on a much higher level of savings.
Okay, we are running short of time. We'll take the rest of the questions offline. Our leaders are right around, so you can just meet them at the coffee area or wheresoever. Yeah? Thank you, sir, very much. Thank you, sir. Thank you.
So much.
Thank you, Mr. Rajashri Banerjee. Thank you, Mr. Vineet Sikka. Thank you, Mr. Brajesh Singh. Thank you, Mr. Sandeep Kashyap, for the presentation, being here with us. Thank you so much, everybody, for the Q&A.
Thank you.
You may now take back your seats. Can we have a round of applause for the whole team, please?